In the face of a recent 5% dip in XRP's price, Edo Farina, CEO of Alpha Lions Academy, urges investors to stay resilient. He predicts that as XRP becomes a financial standard, major institutions like Wall Street, Grayscale, and BlackRock will seek to acquire it at three-digit prices. Farina emphasizes the importance of holding on to XRP through market fluctuations to capitalize on its long-term potential. As of February 18, 2025, XRP trades at $2.54, reflecting typical market volatility. Investors are encouraged to focus on the bigger picture and avoid panic selling during short-term downturns.
Did you know that the same financial titans controlling Wall Street are secretly reshaping the crypto game? Targeting XRP holders with a plan that could redefine markets forever? Imagine a world where quadrillions of dollars are moving behind closed doors, where institutions like the DTCC, NASDAQ, and even BlackRock are engineering a market revolution. And at the heart of this upheaval, XRP. If you've ever wondered whether crypto is just a flashy promise or the real future of money, you're about to get the inside scoop on how Wall Street's heavyweight players are orchestrating a seismic shift. Stay tuned.
BlackRock and Ripple are reportedly exploring an XRP spot ETF, and if it happens, it could be a game changer for the XRP community. A spot XRP ETF would open the door for institutional money to flow in, boosting XRP's legitimacy and potentially its price. BlackRock already led the way with Bitcoin and Ethereum ETFs. XRP could be next. The only thing standing in the way, regulatory clarity. The SEC still hasn't fully green-lit XRP, but a pro-crypto shift in Washington could flip the script.
For years, the narrative around cryptocurrency has been painted in broad strokes: sky-high promises, flashy success stories, and endless debates over whether it's a bubble or the next evolution of finance. But behind the glitz and glamour, there's a hidden network of institutional forces rewriting the rules of the game. Today, we're uncovering the machinations of Wall Street's finest, including BlackRock, and how their moves are directly linked to the fate of XRP holders. Let's break this down. You've probably heard chatter about quadrillions of dollars, a number so vast it sounds unreal. Many dismiss it as hyperbole, a fantasy spun by those chasing quick riches. But the truth is far more intriguing. When you start peeling back the layers, you find that major players like the DTCC are orchestrating systemic changes that affect not just traditional equities, but digital assets as well.
News for XRP and XDC. The DTCC has picked R3 Corda for their project Ion. This has been announced all the way back in 2022. Now, why is this a big deal? The DTCC isn't just a company. They are the backbone for US security settlement, handling an unbelievable 2.4 quadrillion in security transactions just this last year. That makes this especially interesting for XRP and XDC, as they are the settlement tokens for R3 Corda. So essentially, they could be connected to one of the biggest financial infrastructure projects in the world. Their choice for R3 Corda could have huge implications for the future.
Take the recent announcement from the DTCC, the premier post-trade market infrastructure for global finance. They revealed that their NSCC subsidiary is set to extend clearing hours, paving the way for what's being dubbed 245 trading by industry insiders. This isn't just a minor schedule tweak, it's a strategic move designed to maximize liquidity and minimize counterparty risk around the clock. With implementation targeted for the second quarter of 2026, this initiative is set to synchronize markets across time zones, enabling continuous trading that could supercharge market activity. Now, why should XRP holders pay attention? Because at the core of this transformation is liquidity, the lifeblood of any market. And here's where the plot thickens. The DTCC's strategy is closely aligned with the interests of NASDAQ, which has been hinting at 24/7 trading for some time. In fact, NASDAQ is gearing up to launch round-the-clock trading in 2026, a move that promises to attract global investors and supercharge daily trading volumes. But while NASDAQ and the DTCC are busy re-engineering the market's infrastructure, there's another powerful force in play: BlackRock.
XRP is on the verge of a major breakout, with analyst Ollie Martinez predicting a potential rise of 245% from its current price of $2.25. After breaking out of a nearly 7-year bearish trend, XRP is showing incredible strength with 3 consecutive bullish patterns. Martinez sets a conservative target at $8.40 and an optimistic one at $48.12. Meanwhile, Ethereum is also looking strong, poised to reach new all-time highs if it maintains support above $3,560. With whales accumulating massive stacks of the meme token Pepe, the crypto market is buzzing with activity. Keep an eye on these developments. The next few months could be game-changing.
BlackRock, long known as a juggernaut on Wall Street, has recently been making waves in the digital asset space. Their push for tokenization, turning traditional assets into digital tokens on public blockchains, is a game changer. BlackRock's CEO, Larry Fink, has publicly urged regulators to expedite the approval process for tokenized bonds and stocks. This isn't just corporate buzz, it's a signal that the future of finance is shifting from paper to code. And where does XRP come in? Many believe that the XRP ledger, with its long track record and ability to handle high throughput, is ideally positioned to become the backbone of this new financial infrastructure. Remember, while private blockchain networks have served as safe havens for banks in the past, their closed-off nature is increasingly seen as a bottleneck. The industry is now rallying around public blockchains, open, transparent, and scalable solutions. And as these institutional giants push for a public blockchain approach, XRP is being eyed as the key player to facilitate the massive volumes of 24/7 trading.
So just in, BlackRock has been registered as a crypto asset firm with the Financial Conduct Authority in the UK. So not only did Larry Fink tell you from 2017 to 2023 that it's used for money laundering, but he flipped the script in America in 2023 when he saw we're going into an inflationary environment. He went into a deflationary asset. They launched their, which strategically he told us it was a flight to quality. He said, hey, I was wrong. It's a flight to safety, a flight to quality in 2023. And then by January 2024, we had a Bitcoin ETF, which is now one of the largest Bitcoin ETFs in the world, making BlackRock the second largest holder besides Satoshi Nakamoto.
Let's talk specifics. In February, the DTCC unveiled plans to revolutionize asset management through a platform called Composer X. Designed to bridge traditional finance and decentralized technology, Composer X promises to unify legacy systems with blockchain solutions, streamlining everything from token creation to settlement. This technology isn't just theoretical, it's already in the works and could soon become the standard for managing digital assets. With companies like BlackRock and Citadel in the mix, the infrastructure to support 24/7 trading is being built piece by piece, and XRP stands at the center of it all. But it's not only about technology. The human element, the decisions made by Wall Street's elite, adds another layer of intrigue. Picture this. Major exchanges like NASDAQ and the New York Stock Exchange are not just passive observers. They're actively collaborating with the DTCC, NSCC, and other financial powerhouses to extend trading hours and integrate digital assets into their systems. For instance, NASDAQ's plan for round-the-clock trading isn't happening in isolation. It's part of a broader strategy involving key partners such as the 24X National Exchange, Blue Ocean Technologies, and even the CBOE.
CBOS BZX Exchange is hoping to launch the first spot Ether exchange traded funds in the US, filing the paperwork for products tied to ARK21 shares and banning. On Wednesday, the exchange filed 19B4 documents, formally kicking off a review process. Once the US SEC acknowledges the filings, it will start a 240-day clock for a final decision. The SEC is going to have a number of intermediary deadlines to make a decision, but has traditionally taken the maximum number of days possible to review applications.
Wall Street's chess game is unfolding on multiple fronts. On one hand, you have the traditional institutions reconfiguring market operations to meet a new era of global demand. On the other, there's a clear push from crypto-savvy innovators who see blockchain and tokenization as the ultimate solution for efficiency and liquidity. Robinhood's CEO, Vlad Sev, has even remarked that blockchain is the crucial key to this transformation. With so many moving parts, the stage is set for a dramatic showdown between the old guard and the new digital revolution. Now let's zoom in on one particularly pivotal moment, On March 7th, Nasdaq announced a bold plan to expand its trading hours to 24 hours a day, a move that could fundamentally alter the landscape of global markets. Imagine the impact: a trading day that never sleeps, where liquidity flows continuously, and where the boundaries between traditional and digital finance blur. This isn't just a logistical upgrade, it's a radical rethinking of how markets operate. And as major institutions scramble to adapt, XRP is poised to benefit from this seamless integration of digital asset trading.
Huge news for crypto enthusiasts. Remember when Robinhood gave XRP the boot during that lawsuit drama? Well, guess what? XRP's back, baby. Ripple just scored a massive win in court, and now Robinhood's rolling out the red carpet for XRP trading starting in the EU. This is a game changer, folks. It's like XRP just got a golden ticket to the crypto party. Think about it. More accessibility, more liquidity, and a major credibility boost. This could send XRP's value skyrocketing and cement Ripple's place in the financial world. We might be witnessing the rebirth of a crypto giant. The question is, are you ready to ride this wave? Because XRP's comeback tour is just getting started, and it's looking like it'll be one for the history books.
Adding to the intrigue, Nasdaq's decision to establish a new regional headquarters in Texas signals a strategic shift. Texas is fast becoming the new financial frontier, a hub for companies escaping over-regulated environments in traditional financial centers. With favorable legal and regulatory conditions, Texas is attracting top companies, and the momentum is undeniable. This migration isn't happening by accident. It's a calculated move driven by the promise of a more agile and innovative market environment. And when you combine this with the tokenization push from BlackRock and Citadel Securities, it becomes clear the traditional financial system is on the brink of a transformative overhaul. Let's step back and examine the broader picture. Wall Street isn't simply evolving, it's reinventing itself in real time. With the DTCC moving quadrillions of dollars per year and institutions like Nasdaq and BlackRock leading the charge, the financial world is bracing for a revolution. This isn't about isolated technological upgrades or marketing buzzwords. It's about redefining how money moves, how assets are managed, and ultimately, how value is created and distributed.
BlackRock and Citadel Securities have come together to create the next big stock exchange called the Texas Stock Exchange. This stock exchange is not only going to rival the NYSE, but it's also going to rival the NASDAQ as well. And this stock exchange is special for 3 reasons. First, it's in Texas. Texas is a very pro-business state where there's less tax burden and there's less stringent regulations compared to that of the New York Stock Exchange or even the NASDAQ. Secondly, the Texas Stock Exchange is trying to challenge the rising compliance costs at NYSE and NASDAQ. So this would be a greater opportunity for companies to come in and sell their shares on this stock exchange where they're not having to pay as much of a regulatory fee as compared to the NYSE or the NASDAQ. Lastly, the Texas Stock Exchange also does not require any board diversity such as the NASDAQ, which was just implemented a few months ago.
Every time you hear about extended trading hours, tokenization, or digital assets, there's a deeper underlying strategy at work. It's a strategy designed to maximize liquidity, reduce friction, and create a seamless, integrated market that operates around the clock. And for XRP holders, this shift is a double-edged sword. On one side, there's the promise of unprecedented growth and mainstream adoption of blockchain technology. On the other, there's the unsettling reality that behind these innovations, powerful financial players are pulling the strings. What does this mean for the everyday investor? If you're holding XRP, you're not just a bystander. You're part of a larger narrative that could see massive capital flows and market disruptions. Wall Street's agenda isn't hidden. It's right there in the announcements, in the strategic partnerships, and in the rapid pace of technological adoption. Every move, every merger, every extension of trading hours is a piece of a puzzle that, when assembled, reveals a bold vision for the future of finance, one where digital assets like XRP could play a central role.
We just got some huge news as it relates to crypto adoption, big banks. There's a major update. It has to do with FDIC, which stands for Federal Deposit Insurance Corporation. They recently updated their guidelines and now allowing FDIC supervised banks to engage in crypto-related activities without the prior approval that was previously required. This move is seen as a huge step in the right direction towards broader acceptance and mainstreaming of crypto within the financial sector.
Now let's pivot to another critical element, tokenization. Tokenization isn't just about converting assets into digital tokens. It's about fundamentally rethinking asset ownership and liquidity. When BlackRock and Citadel Securities push for tokenized stocks and bonds, they're not just innovating. They're laying the groundwork for a market where every asset can be fragmented, traded, and manipulated in real time. And while this promises incredible efficiency, it also opens up new avenues for control and exploitation. Public blockchains are emerging as the preferred medium for this transition, and XRP, with its proven track record and high throughput, is emerging as the frontrunner. Let's not ignore the human side of this story. Financial markets are driven not only by numbers and algorithms, but by the ambitions, fears, and aspirations of the people behind them. Many retail investors see crypto as a beacon of hope, a way to break free from an entrenched system that has long favored the wealthy elite. But as we peel back the layers, it becomes evident that even in the decentralized world of crypto, the fingerprints of Wall Street are unmistakable. The same institutions that built the traditional financial system are now infiltrating the digital realm, leveraging their expertise and vast resources to shape the market in their favor.
Huge breaking news for XRP. XRP is about to tokenize US Treasury bills on the XRP ledger. This is being done by Open Eden Labs, and basically they're making a tokenized version of these T-bills. Even further, Ripple, the centralized company, is creating a fund to invest 10 million US dollars into these T-bill tokens. Will this move the XRP price? Probably not. Is this extremely cool and extremely bullish news? Yes. Two things can be true at the same time. This doesn't have to move the XRP price, and it can be bullish. But just so you know exactly what's happening here, an independent company is going onto the XRP ledger, tokenizing US Treasury bills, and then Ripple is investing in their own fund $10 million into those T-bill tokens.
Take a moment to reflect on the scale of it all. The DTCC moves quadrillions of dollars every year. Nasdaq's daily volume is measured in billions. And now, with plans for continuous trading and tokenization, the stakes are higher than ever. For XRP holders, this convergence of traditional finance and digital assets is both an opportunity and a risk. It promises a future where blockchain technology can revolutionize asset management, but it also warns of a scenario where market control is consolidated among a select few. So where does that leave us? Are these changes a calculated manipulation by Wall Street and BlackRock to dominate the crypto space? Or are they the necessary steps to create a more efficient and liquid market? The answer remains shrouded in controversy, and it's up to you, the informed investor, to decide where you stand.
Crypto enthusiasts, let's speculate. BlackRock, the financial giant, and XRP, the only crypto with regulatory clarity, could they be a match made in blockchain heaven? BlackRock, always seeking innovation, may eye the XRPL for new payment infrastructure. Why? XRP's regulatory clarity is like a hall pass in crypto's Wild West. And with BlackRock's focus on institutional money and XRP's cross-border payment capabilities, this pairing could be more than just a pipe dream. As the finance world goes digital, BlackRock may be tempted to ride the XRP wave. But in crypto, anything can happen, so keep your eyes peeled and wallets ready. This could be the start of something big, or not. Only time will tell.
As we peel back the layers of this unfolding drama, it's clear that the future of finance is being written right now. Every announcement about extended trading hours, every discussion about the tokenization, and every strategic move by industry giants is a chapter in a story that could redefine everything we know about markets. And if you're holding XRP, you're not just witnessing history, you're part of it. There you have it, the intricate web of moves by Wall Street's finest, orchestrating a market revolution with XRP at its core, is unfolding in real time. What does the future hold? Will these massive institutional shifts empower the everyday investor, or will they cement the dominance of the elite? I want to hear your thoughts. Drop a comment below, hit like if this video opened your eyes, and subscribe for more deep dives into the financial forces shaping our world.